Hey everyone, Tom Gaumond with G2 Insurance Services here with today's 2 Minutes with Tom. Today we're going to talk about workers' compensation. Now if you're a business owner in Wisconsin, you know that work comp is required and it's there to protect your employees in case they ever get injured, pay for their medical bills, pay for their lost time. And in the state of Wisconsin, no matter which insurance company you go to, you pay the same rates based on your class of business because the state sets the rates. So if you're a mechanic, no matter what company you go to, the rate is always going to start out at the same place. But today we are going to talk about two different factors that can potentially affect what you pay for your workers' comp cost. So the first one is what's called an experience modification factor. Now again, this is controlled by the state, so you can't really do too much about it, but it's based on your claims. And basically it says that, look, in your industry, if you are spending currently more than $7,750 a year in workers' comp, then the state can look at you and say you are either better than your industry or worse than your industry. And if you're better, you'll get a discount. If you're worse, you will get a surcharge. And those are all based on your premium versus what you actually have in claims. So fewer claims, better discount, more claims, higher claims, bigger claims, worse surcharges. Surcharges can be pretty hefty, up to 100%. Discounts maybe around 30%, give or take. So that's something, again, it's controlled by the state, but if you control your losses, you can have a hand in that. The second thing is dividends. So a dividend is a way for an insurance company to say, look, we know you have to pay the same amount up front, but we think you're better than average, we think you have a good loss history, and if you come with us, if you don't have any losses this year, maybe we'll give you 10 or 15 or 20% of your premium back. Now, usually companies say you have to have about $3,000 in premium at least to even start talking about a dividend. But once you get that, they can be dependent on your losses, they can be a flat amount. There's a ton of different ways, but ultimately it's a way for the companies to say, hey, you're a good client and we want to help you and we want to give you a little money back. So that is 2 Minutes with Tom about workers' comp. Hope you have found it insightful and helpful. Thanks for watching.